Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets. I'm going to be giving you an update as to what's been going on so far this week. Uh, Might as well start by jumping straight into the charts. We can talk about what's been provoking the price action. You can see here that the S&P 500 has seen a bit of a slip, a 1.5% loss just over on Tuesday. Seen a slight recovery, but we are now back below the 50-day moving average and the 4,000 level. And this failure to hold above the 21-day moving average and that recent resistance level in the form of those mid sort of early February lows is a bit of a setback technically in the short term. But you can see here we're still holding substantially above the 200-day moving average and above the 2022 downtrend, which suggests to me that the potential move higher back towards 4,200 isn't dead yet, although it would be concerning if we did come back to test this support area once again, and then obviously if we did break below that, the door would be open to a test of these 3,700 lows. But in terms of the fundamentals that has been driving this weakness in US stocks, it was really the hawkish tone from Fed Chair Powell. He did surprise markets. He did hint that the Fed could increase the pace of interest rate tightening, which has got a lot of people now betting on a 50 basis point rate hike from the Fed later this month. Let's just have a look at the CME Fed Watch tool here, and we can look at how the probability of a 50 basis point rate hike has changed. Let's just let it load real quick. Here it is. So the probability of just a 25 basis point rate hike to the 4.75 to 5% region from the current 4.5 to 4.75 range is now just seen as 30%. So 70% chance now of a 50 basis point rate hike later this month. Now, a week ago, it was the opposite. It was 70% chance of a 25% basis point rate hike and a 30% chance of a 50 basis point move. So it's almost been like there's a reversal in those probabilities. And that's obviously in wake of Powell's remarks yesterday. He also talked about how the Fed could potentially lift interest rates to a higher level than currently expected, as well as at a faster pace. So it was like a double hawkish blow. I mean, in the face of that hawkishness, it's actually quite impressive that stocks are still holding in this 4,000 area. And, we've also had some more US jobs data out today. ADP, non-farm employment change, which is like a prelim sort of estimate for the official non-farm number. Stronger than expected, 242k. Expected was just below 200k, which you got to think adds some upside risk potentially for the official NFP number on Friday. And then jobs also, the number of job openings at the end of January, higher than expected at 10.8 million. Expected was a drop to 10.58 million from 11.23 million. And actually this 11.23 million was revised higher from 11.01 million. So very, very strong jolts, or, the jolts basically showing that the demand for labour remains very strong in the US. So hot labour market still, all pointing towards a more hawkish Fed. Whether they actually are going to go 50 basis points later this month, I'm still not convinced of that, to be honest, even though the market says it seems to be the market's base case. Although the more the market gets convinced in the run up to the meeting, and if the Fed doesn't push back against that market pricing, that is seen, how can I explain? Pretty much the Fed doesn't like it when market pricing going into one of its meetings is wildly wrong. The Fed likes to guide the market very well into a meeting and then deliver what's expected. That tends to be their style. They like to communicate their intentions pretty much. So, if the market's saying 50 basis point rate hike later this month, then you got to think that probably is what the Fed's going to deliver. I still am not convinced, but let's see how the next couple of weeks play out with Fed communications. Fed communication is going to be very important from now on, obviously, as we gauge whether there's going to be this 50 basis point move or not. But anyway, that's what's been going on with stocks, weighed by the hawkish Fed and the strong US data. Obviously, you can see that the DXY here has finally hit that level that I was talking about. Whoop-de-hoo. consolidating around 105.50 now, above the 100-day moving average. The next bullish target would, of course, be the 200-day moving average around 106.60. And that's obviously weighed across all the major pairs. You've seen euro dollar dip to recent lows, cable dip to recent lows, dollar yen touching, and although failing to break above the 200-day moving average, and this support tone resistance area around 138. Seen some interesting action in some other pairs as well, like dollar CAD. We had a pause from the Bank of Canada today. They didn't raise interest rates. They're pausing at 4.5%. So, that combined with all the dollar strength is not working out for dollar CAD, which is now about to test or testing its November highs and could potentially go all the way back to its last October highs as well. You got hawkish Fed, sort of more dovish BOC combination, not good. And, you also got oil that's been weakening as well as the dollar strengthens, not good for the loonie. We never quite made it. So we had this little pennant breakout, never quite made it to the upside target, and now we've sort of pulled back. So I'm going to delete this pennant now. Or, well, maybe I'll leave this support line in play. But yeah, it looks like oil's going to remain range bound. Gold coming under pressure as you would expect when the dollar is strengthening, and yields have been pushing higher as you would expect in wake of the hawkish Fed. We finally hit 5% in that 2-year, like I've been saying, I think would happen for quite some time. 10 years still, though, struggling to get above 4%. So, you can see now that you've actually got the spread between the 2 and the 10-year of above 1%. And that's the first time we've had the 2 10s spread that wide since I think people were saying 1981. So the bond market, and back in 1981 was when Volcker was doing these aggressive rate hikes to get double-digit inflation back down to the Fed's 2% target. And at the time, that triggered pretty bad recession. So, bond markets are screaming that there's going to be a recession. So, this soft landing narrative, we've still got robust US economic data, but how long until the lagged effect of all the interest rate tightening from the Fed really starts to be felt? Sometime later this year, perhaps. But, we've pretty much looked at everything, haven't we? Let's just quickly go back to the calendar, recap if there's anything I've missed. The RBA hiked interest rates by 25 basis points as expected, but that didn't do much. Oops. AUD, USD, there we go. Didn't do much to save the Aussie, which is, testing this support here from last November. And in terms of what else we had, nothing really. So now we're just looking ahead. A little bit more US jobs data tomorrow. The weekly unemployment claims, which have remained very robust recently at under 200k. Then the Bank of Japan policy meeting. Then UK GDP, which is always interesting for the sterling traders. Then Canadian employment. Any CAD bulls will be hoping that comes in strong to put a bit of a floor under the loonie, which has been getting battered recently. But then the most important event this week, obviously, this US jobs data. And if that comes in hot, very much supports the hawkish shift from the Fed and would underpin some of these recent moves. Dollar strength, higher yields, stock weakness, perhaps. Although if it does come in strong, it does push back against, or it does strengthen the soft landing narrative, which means that maybe downside in stocks won't be too bad. But conversely, if it came in much weaker than expected, then we'd probably see a big reversal of some of the moves that we've seen this week. Dollar weakness, yields down, stocks up. But anyway, that's what we're looking out for the rest of the week, guys. Hope you all enjoyed the video. Hope you all found it informative, and I will see you all in the next one.